A warm welcome to you, my dear children. We meet again with the Unit 8, last part of the cash book. When I say last part, in the previous session, 2, I said this is the last part. But we are ending the cash book today with one last exercise. One last exercise. That is the activity 3, which is in your textbook. This is about preparing the cash book with discounts and the relevant ledger accounts. All right. So, let's look at the activity now, shall we? Activity 3. Anuradha's business has the following balances as at 1st July 2021. Now, this entire activity I have separated into 2 sections just for your convenience and for your better viewing. Likewise, alright. So, activity 3, Anuradha's business has the following balances as at 1st July 2021. Let's say 2021. Alright. Anuradha's business. This business is a sole proprietorship. Let's assume that it is a sole proprietorship, which is carried out by Anuradha. Carried out by the owner, Anuradha. And he has given the following balances: 1, 2, 3, 4, 5, 6. As at 1st July 2021. 1st July 2021. 1st July. I have very clearly told you, children, in a previous session, in several sessions, I have very clearly told you that if balances are given to you, what have I told you? If balances are given to you in this manner, saying that these are the opening balances of the business. What have I told you? Tell me. If balances are given to you likewise in this manner, right? 1, 2, 3, 4, 5, 6. What have I told you when starting a question of this sort, of this kind of a question? What have I told you? I have taught you, children, that these type of questions with opening balances, they must have a set of accounts opened before you record the transactions, before you record the given transactions, before you record these transactions, children. Before you even look at these transactions. I'm talking about these transactions. Before you even look at the transactions, you must open a set of accounts, set of ledger accounts, according to the given balances. For these given balances. You get it? Because these organizations, these businesses are already running businesses, children. They are already running businesses, not newly started businesses. This Anuradha's business has been running for a period of time, maybe a few years. Alright. That's what you should keep in mind before you start this kind of a question. Every time you do this sort of a question, okay? Right. So, we have the following balances given to us, given to you. So, we start the question by recording these balances in the relevant accounts. Let's see. Opening balances. What balances do we have? We have cash, which means we need a cash book drawn, cash book ruled before you start even to look at the transactions. You need a cash book. You need to rule the cash book. Then we have debtors. We have one called Hustler and another one called Ravisha. Yeah, Hustler has a balance of 22,000, right? Ravisha has a balance of 28,000. These are debtors. Trade receivables. People who owe us, our customers who has to pay us. This guy has to pay 22. This girl has to pay. Ravisha must be a girl, right? Let's assume it's a girl, and she has to pay 28,000. Then we have the capital account. In that, a balance of 75,000. Finally, we have creditors. Sahasra, 25,000. Kaumadi, and she has 20,000. Likewise, children, we have opening balances to be recorded in the relevant accounts. Okay, right? Right, fine. Straight away, we are going to go and draw these accounts, right? No need to look any further. Transactions we can check out later. Just take a look at the required part. Write up the cash book with discount columns. We need a cash book with discount columns. Okay. Write up the cash book with discount columns. Discount. You remember how to draw the cash book with discount columns, right? We did it in the last session. And balance of the cash book as at 31st July, the end of the month. 31st July. That is for a month. That means you have to record the transactions of a month, children. Just a month's transactions. Then they say to write up the ledger accounts involved in the above cash transactions, which is the relevant ledger accounts. Okay. All right. Right. Let's go. We have a blank slide. It's up to us to draw these accounts to record the opening balances. We are going to draw the cash book first. There you go. You already know, children, that we have to draw the T first, a T format, in order to separate the columns. First of all, we have to draw the T format. This is the easy way of drawing the cash book. Why do I draw? Why do I say that you should draw the T format first? Why do I say that? I say that, children, because you can easily divide the debit and credit sides equally. Now the debit and credit sides are equally divided. Now it's easy for you to divide the columns, to separate the columns. Now I have given you an easy method to remember the columns. Just to remember how to draw the columns. The width of the columns, the smaller columns and bigger columns, to remember the order. This is the method, if you can remember. I told you to draw the columns like this, in this manner. Little things have big effects, like little and big. Little things and big things. Little things have big effects, right? So even though we draw the cash book in this manner, now you should remember that there should be another column, that we must have another column. You remember, right? What is that column? Tell me. What is that column? The discount column. We need a discount column. Okay. So what I'm going to do is I'm going to draw two equal columns next to each other. This is for the amount and this is for the discount. Okay. And something else that you should remember is, children, there's something that you must bear in mind. In the debit side, discount column, the discount column that we must draw is discounts allowed or discounts received. In the debit side, the discount column we should draw this one. What is the discount column? It should be the discount allowed column, or it should be the discount received column. Discounts allowed column. Remember, discounts allowed column. Okay. Let's name the columns, right? Date, receipt number, details, or you can write description, doesn't matter. Discounts allowed. Discount allowed. Can see it, right? Then the amount column or the value column, you can just mention the currency, the rupee sign, then it's done. Same as that in the credit side, dividing the columns should be done in the same manner. Small things have big effects, but next to each other we need two columns for amounts, that means for discounts and the amount, and for the amounts. Right. This is the row for headers. These are the headers. You should learn to do these things with at a very less time, with the minimum time as possible. Okay. Don't take too much time to draw formats. This is the very first activity that we are doing from the cash book. That's why I'm taking more time to make it clear to you. All right. The rupee sign. This is the cash book, children. This is the cash book. All right. What are the other accounts that we need to draw? You should look at the question. You should look at the question at the opening balances given. That's what you should refer to. That's what you should look at. You should look at the opening balances given. See? Now we need, now we have already drawn the cash book, ruled the cash book, and we have to record the opening balance of the cash book, right? Let's record that 70,000. Is it a debit balance or is it a credit balance? How do you figure it out? They say in the cash book there is a balance of 70,000, and how do you figure out, how do you be sure, how can you be sure that this is a debit balance or whether it's a credit balance? How can you be sure? Well, children, if it is a credit balance, it will be mentioned. Okay. Normally, cash books have debit balances, which means there is a cash balance brought forward to this month, to the month of July, as at 1st July. As at 1st July, there is a cash balance. Okay, cash balance brought forward, that is an amount of 70,000. And if it is a credit balance, in the question it will be mentioned. But here it's not mentioned that it's a credit balance. Likewise, it will be mentioned. All right. But nothing is mentioned here. That's why we take it as a debit balance. Normally, cash books have a debit balance at a start, at the beginning of a period. Normally, usually. Okay. We'll go and record the 70,000 in the debit side, 70,000, and we must mention that it is the balance brought forward. We learned about balances carried down and balances brought forward in the last session. If you have trouble or if you have doubts about this, how to put the balance and what is the balance, what is the meaning of balance brought forward, you should refer to the previous session. Watch the previous videos, and we learn how accounts are balanced and how to take the balances. We have done that. How to take the balance carried down and balance brought forward. Now it's here, recorded. We are going to go and look at the next balances given. We have debtor Hassel as 22,000, debtor Ravisha 28,000. Let's draw two T accounts. I'm just going to draw T accounts without columns to speed up our activity. To finish this quickly. Hassel 22,000, Ravisha 28,000. Two ledger accounts. This is Hassel's account. This is Ravisha's account. All right. And let's check out and record the balances of these two people, two debtors. Debtors. We need to record 22,000 in Hassel's account and 28,000 in Ravisha's account. Let's go and name the accounts. Hassel's account, Ravisha's account. Right? Just T accounts, just T formats are not acceptable in your exams. You should draw with columns. the ledger accounts with columns. Here I'm just drawing the accounts just to speed up this activity, right? Don't forget the debit and credit sides always. Debit, credit, debit, credit. Okay. All right. Now we'll record 22,000 in Hasala's account. Which side, debit or credit? Should we record in the debit side? Or should we record in the credit side? Or should we record in the credit? What is the side of these debtors? In which side in these debtors accounts should you mention the balance brought forward? Yeah, I'm expecting the answer from you now. Tell me. Hasala is a debtor. Ravisha is a debtor. Hasala has a balance of 22,000. Ravisha has a balance of 28,000 at the beginning or start of the period, first of the month. These balances should be recorded in debit or credit. Debit or credit. I can hear debit, I can hear credit, I can hear all sorts of answers. Yeah, most of the people are saying debit. That's right, debit. Because debtors are assets to the business, not liabilities. Debtors are assets to the business. And asset accounts always, not every time, most of the time, asset accounts usually asset accounts have debit balances. All right. Then we are just one step away from going to the other accounts. What is that step? Recording the balance of these accounts. Balance brought forward. 22,000. Here also balance brought forward 28,000. Now the students who are wondering why I wrote balance, the word here, and BF likewise, and why I wrote BBF here likewise. Children, this is the short form actually, balance brought forward. You can use this form, you can use this method, balance brought forward, or it's better if you can write balance, the word here, and BF brought forward. Without this entire word, you can use BBF also, balance brought forward. It's the same thing, right? Okay. So we are done with recording the balances of the debtors accounts, right? Recording the balances of debtors accounts. Debtor Hasindu and debtor Hasala and Ravisha. These are done. Now we are moving to the next account, which is the capital account. Capital account has a balance of 75,000. Let's draw that. We have the cash book on top, and underneath the cash book you should draw the relevant ledger accounts like I have drawn here. But when you draw accounts such as capital account and these debtors accounts and creditors accounts, don't take a long like very long vertical space. I'm just telling you whether when you draw the ledger accounts, Don't take too much space downwards like this. Normally you will have 2-3 entries to record in these accounts. So just 4-5 lines in your answer sheet is enough for these ledger accounts. Okay, and we are going to draw the capital account. Capital account. Shall we draw the capital account here in this corner? And let's record the balance of the capital account. There was a balance of 70,000. See, there was a balance of 70,000 in the capital account. 75,000. Which side do you record in the capital account? Which side do you record this opening balance of 75,000? Which side? Debit or credit? Capital account, debit or credit? Those who got together and learned how balances are recorded in the previous session, in our previous video, you can tell me. Capital always has a credit balance. So in the capital account, 75,000 should go to the credit side. 75,000, the opening balance of the capital account in the credit side. Okay, BBF, balance brought forward. There you go. Let's finish off recording the opening balances with the two creditors accounts. We have Sahasra, first creditor. We have Sahasra, first creditor, and Kaumadi, second creditor. 2T accounts for the two creditors. I told you that if opening balances are given to you, for each opening balance, you should draw that relevant account and draw and record the given opening balance. That's why we are going to record the creditors. Sahasra's balance 25,000 and Kaumadi's balance 20,000. Remember, creditors are liabilities and liability accounts usually have their balance in the credit side. Okay. In other words, creditors are liabilities and creditors accounts normally have their balances in the credit side. Opposite of debtors accounts. Debtors accounts have the balance in the debit side, but creditors accounts, these are debtors accounts, debit side. Creditors accounts should have the balances in the credit side. Let's mention Sahasra and Kaumadi. Debit and credit. right? Can you remember the balances given? Sahasra 25,000, Kaumadi 20,000, and we know that creditors balances should come to the credit side. That's right. 25,000 for Sahasra, 20,000 for Kaumadi. Balance brought forward. All right, we are done with recording the opening balances. Easy peasy, right? That's nothing. There's not much there to learn. We have done these things. Moving down to the transactions. Debtors accounts, creditors accounts, capital account here. It's here. All right. Debtors accounts, creditors accounts, and the cash book. Moving down to the transactions, and let's record the double entries of the transactions. Right. First transaction. Following transactions took place during the month of July. First one is here. Let's number them. First one, 3rd July, bought goods for cash, 28,000. Bought goods for cash. All right. 28,000. Buying means purchasing. Purchasing means bringing more goods or more stock to the business, right? So goods come into the business, but you have to pay for them, so cash goes out. Bought goods for cash. You have to pay for them. Cash goes out. You have to pay out cash. So cash goes out, decreases, asset decreases, credit. Goods increases, debit. Got the double entry. All right, I know that you got the double entry, but you tell me which account should be debited, which account should be credited again. Tell me now. Which account should be debited, which account should be credited? This 28,000. 28,000 of this transaction for buying goods. This 28,000, this value. This should go in which account, to which account debit side and to which account credit side. I just told you. Yeah, so is it goods account debit and cash account credit? Goods account debit? No. No. No, 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 no. You have learned these things, children. There is no goods account. There is purchases account. There is no goods account. The account that we draw for goods purchasing or buying goods is not the goods account. It's the purchases account. Remember these things, children. You can never forget these things in accounting. These are basics, right? Here we go. Cash account should be, cash book should be credited, right? Yeah. Yeah, bought goods for cash 28,000. So 28,000 should be credited to the cash book. Cash book, credit side 28,000. No discount, no nothing. Well, even if there were a discount, that should be a trade discount. Trade discounts are the discounts given when buying or selling goods. When buying goods, when goods come into the business, at the point of purchasing the goods, the amounts which are deducted at the point of purchasing the goods, when you buy the stocks and when you bring them to the business, right there at the point of purchasing, if an amount is deducted, that is a trade discount. You don't record trade discounts in accounts. No, you don't. Trade discounts are not recorded, not taken into the books. You just deduct that amount. You just deduct the trade discount, the small amount which is deducted, you deduct, you subtract from the list price. And that discounted price, that value after deducting, that should be taken into your accounts, not the discount which is deducted. Trade discounts, no, not recorded in the books. Here, anyway, there is no trade discount in this transaction. We know that cash book should be credited and purchases account should be debited. That means we should draw a purchases account. We should draw a purchases account. Date is 3rd. Let's go and draw a purchases account. Where? Let's draw it right here. Where are we going to draw the purchases account? Let's draw it here. Purchases account. Purchases account. Okay, right. Mark the debit and credit sides and record the entry which went to the credit side of the cash book. Where was it? It was here. 3rd, 28,000 of a purchase. 28,000 of a purchase. So purchases account should be debited because the cash book was credited. If you find out, children, just one entry, if you find out, and if you are sure that cash book should be credited, obviously the other account should be debited. There is no doubt about that. 28,000. Here the description is cash. 3rd, 7th. Done. This is done. We'll do one more. Second transaction. That is second transaction. That is done on 8th. Cash received from Hasala, rupees 7,000. Hasala is a debtor. Yeah. Hasala is a debtor. Where is it? Where is Hasala's account balance? It's here, Hasala. He has a balance of 22,000 and he is paying us 7,000 out of that. This guy who owes us 22,000 is paying us now. We are getting money from him. How much? 7,000. Okay. So cash received from Hasala, 7,000. Cash coming in. Cash coming into the business. In. Cash in. Cash coming in means cash is increasing. Cash increasing, debit. Cash coming in, we are getting cash. That means the business cash is increasing. Cash increasing means debit. Cash debit, cash book debit. Which account is credit? Well, hustler, who is a debtor to us, he is also an asset. When he pays us, hustler's outstanding, the amount that, the value that he has to pay us is decreasing. So cash increasing, debit, debtor decreasing, credit. Hustler credit, 22,000 and now he has paid us 7,000. Where is hustler? Oh, he's here. Let's put 7,000 to hustler, the debtor, credit side. And the description is cash. And let's go to the cash account or cash book. Put this 7,000 to the debit side. Description is hustler, that's right. Don't forget the date, children, please. Oh, talking about the dates, I have forgotten to mention the date of the balance brought forward. I have forgotten myself. I myself have not mentioned the date. Bad. That's bad. What is the date of the opening balances? First, I have marked the opening date here, but I have not written it in the accounts, right? So this opening date is first. And when you record the opening balances, don't forget to mention the opening date first. Let's use the same color, otherwise it's not nice. First of March. Okay. And in these accounts too, opening balances always should have the first day of the month. For the opening balances, always the very first day of the counting period. That is most of the time the first of the month. And in Ravisha's account too, you must mention the date. Balance brought forward is here. There is no space to mention the date. So I'll just mark the date like this. Here also, date, don't forget the date. Right. We are done with that. We actually recorded that transaction, right? Yeah. In cash book, entered hustler's 7,000, and in hustler's account entered 7,000. Double entry is done. Again, the date 8th. 8 should be 8th March. 8th March. Okay. Then done with the second transaction too. Let's move on and do several more transactions. Third one, cash sales 12,000. It's easy. Cash sales. Are we selling cash? Cash is sold. Cash is sold. No. Cash sales means selling goods for cash. That is the meaning of cash sales. Cash sales 12,000. Selling goods. Right? Selling goods and getting cash to the business. Okay. So we have got 12,000 cash increase. That means cash book debit. We have got 12,000 by selling goods. 12,000 coming into the business. So cash increasing. That means cash book should be what? Debit. Cash increasing. Cash book debit. Which account should be credit? Sales account. No goods account. Sales account should be credit. Let's mention the cash book debit entry. In the cash book, the debit entry saying or writing the details as sales 12,000, and the other account, the credit account, is obvious because you wrote the name of that account, sales. Sales account should be credit 12,000. Sales account should be credit. How much? It's 12,000, right? Can you remember the amount? 12,000. If you don't remember, just go and see the debit entry in the cash book. 12,000. Sales account 12,000. Yeah, it's 12,000. And the description in the sales account should be what? The description here should be cash. Mention the date, children. Don't forget the date. Let's speed up a little bit. Mention the date, huh? Don't forget the date. Going back and checking the last transaction on this page. This is the fourth transaction. Okay. 16th of July. 10% discount was allowed when the amount owed to Kaumadi 8,000 was settled. We have settled an amount, which means we have paid to somebody to settle the amount we are owing. And this guy, this girl is Kaumadi. Of course, we have a creditor called Kaumadi, see? This creditor, Kaumadi, to her, we are owing 20,000, right? Out of that 20,000, we are paying 8,000 now, okay? And not that total 8,000 is paid. 10% discount should be deducted. The total 8,000 is not paid. 10% discount was allowed when the amount owed to Kaumadi was settled. So we must do the math. Do your calculations. 8,000 into how much? 10%. 10 over 100. Answer is 800. And you minus or you subtract that 800 from the 8,000. Get the 8,000 and subtract this 800, huh? $8,000 minus 800, 7,200. So what is the amount you should record? 7,200 should be recorded. Okay, let's go and record that. How do you record that? 10% discount was allowed when the amount owed to Kaumadi was settled. That means we are paying this creditor, Kaumadi, okay. Kaumadi is a creditor, we have to pay her money. So money goes out, cash decreases. Cash decreases, cash account credit, right? Cash account credit 7,200, but remember there is a discount of 800. That discount should be recorded. Of course, it's a cash discount. Cash discounts are recorded. I'll mention this with a different color. 7,200 is the amount paid, 800 is the discount. 800 is the discount. 7,200 is the amount paid, 800 is the discount deducted. Well, it is a discount received to us. Although in the transaction it says discount allowed, what they say is in a passive voice, like in a passive form. What they say is 10% discount was allowed to us when we paid her the money we owe her. You know, we are owing her and we are paying her, and we were given a discount allowed to us. From our point of view, it is a discount received. Yeah, that's why it is in the discount received column. And we paid 7,200. What is the description here? It should be Kaumadi. Kaumadi. Yeah? That is a double entry, right? Cash going out from the business. Cash going out, that means cash decreasing. Cash decreasing means cash account credit. And creditor's account, debit. Where's Kaumadi's account? Now, should we draw a separate account for Kaumadi? What do you say? We should draw Kaumadi's account now? No, Kaumadi's account is here. It's here. Where is it? It's there. With the opening balance, see? With the opening balance. We already have a balance to pay 20,000 to her. But we have paid 7,200. Yeah, that is cash. Mention the date. And another entry should be there because there is a discount. Children, don't forget the discount, huh? 7,200 recorded, and the discount also should be recorded in Kaumadi's account. And you write the description as discount received. Yeah. All right. Finished with this slide. All these transactions are done. Last one, calculating the discount. Okay, let's move on to the next slide and take some transactions. Do you want to do all the transactions? Well, there are only 5. Yeah, 1, 2, 3, 4, 5. Let's do the important ones. All right. 5% discount was allowed to Ravi Shah when he settled his due of 10,000. 5% discount was allowed. Again, it says 5% discount was allowed when he settled is due. That means somebody called Ravisha, he is paying us. He's paying us. Let's check out in our opening balances whether we have a name. Yes, we have that name, Ravisha. He's a debtor. Oh, previously we thought Ravisha is a girl. Now we know that he's a boy because he owes us 28,000. Here it is mentioned that with a 5% discount, Ravisha, he settles his money, not the entire amount, only 10,000. Let's calculate that discount now. 10,000, all right, into 5%. That means 5 over 100. Answer is 500. You should record this 500. This is the discount. Okay, this is the discount received. Discount received. All right, and what you should do is from the amount that he paid us, he has to pay us, you minus this discount that we have given to him. 10,000 minus how much? 10,000 minus 500. 10,000 minus 500 is 9,500. This is the amount we are receiving from who? Ravisha. Okay. Let's go and record that. What is the double entry, children? Double entry. We are receiving money. Don't forget that we are receiving money. So money in, cash into the business. That means cash increases. Cash increases means cash book debit. Ravisha, his value is going down when he comes and pays little by little. The debtor's value is going down little by little because he comes and settles his debt. Time to time he comes and he pays a small amount and goes. So debtor's value decreases. Cash increases, debit, debtor decreases, credit. 9,500 cash book debit. Discount allowed is 500. The other account name is Ravisha. Ravisha is the other account. Right? Don't forget the date. As always, I'm always telling you. Ravisha, and let's find Ravisha's account. Where is it? Where is it? Where is it? Where is it? It was here. Here. Ravisha's account, credit 9,500 and discount 500. Cash discount allowed. All right, again the date. Children, that's how you record transactions with discounts in the cash book and in the relevant ledger accounts, right? Not too hard for you, I think. It's not too hard for you. Cash book, the recording of balances. Balances means opening balance of the cash book and the opening balance of the other ledger accounts too. With recording part, recording the opening balances. We recorded the transactions too, both in the cash book and in the other relevant ledger accounts. With this, children, I'll just check out how many transactions we have left. We can finish off this exercise for this activity. If it is too confusing for you, still confusing for you, you can comment below, comment on my video, and mention what things are not very clear up to now, and we'll try to adjust, we'll try to redo, or to do a little bit of explaining. To finish this off, children, we have 1, 2, 3, 3 more transactions. Shop rent paid verbally. We can discuss this, right? Verbally, just tell me the double entry of this transaction. Shop rent paid 4,000. Debit and credit. Shop rent paid. Rent paid means cash going out. We are paying an expense, paying for an expense. Cash going out, cash decreasing. So cash book should be credit. Cash decreasing, cash book should be credit. Rent is an expense. Expenses increasing as we pay more and more for expenses. Expenses of the business are increasing. So cash decreasing, cash book credit. Expenses increasing, expense account debit. Cash book credit, rent account debit. That is the double entry of this, right? Next one. 500 discount was deducted when Kaumadi was settled. Again, a paying or a payment to Kaumadi. We did just the same transaction earlier. 500 discount was deducted when Kaumadi was settled 8,000. We did this. Very similar one. Yeah, this one. Okay. 10% was deducted when we paid Kaumadi 8,000. This. So that is a very similar transaction. Okay. Ravisha had sent a check of 7,200 after deducting 800 as discount. We'll do that quickly. Ravisha had sent a check. That means we are getting cash. No, we are getting a check. A check is treated in the same way cash is treated. Okay. It's just like currency. A check is just like currency. The only difference is, children, the check should be deposited in the bank account, right? Until the check is in your cash till or in the cash drawer with you, you can use that check instead of cash. That's true. So we receive cash or we receive a check, doesn't matter. In this instance, in this transaction, Ravisha had sent us a check, 7,200, but after deducting rupees 800 as a discount. Okay, after deducting rupees 800 as a discount. Alright, that means she had to pay us 8,000. She deducted, we gave her a discount of 800. Out of 8,000, when the discount was deducted, 800 was deducted, the remaining 7,200 we got. The remaining 7,200 we got from a check, by a check. Just a simple double entry. We are receiving cash, cash increasing, so cash book debit. Ravisha's account credit. Okay, with the discount, children, 7,200 and 800. 7,200 and 800. We have done this type of transactions before. It's right here. Same transaction. And recording of Ravisha's account. First, we should find Ravisha's account. Where is it? It's there. 7,200. 7,200 and 800. All right. That's how you tackle with a question given to you from the cash book with discounts, right? Recording of transactions in the relevant ledger accounts should be done in this manner, children. But remember, draw the columns in your ledger accounts, okay? Don't forget the date. Simple things, but things that can get you marks. Don't forget the dates. With this part, this is a very quick activity on the cash book. We finish the part of the cash book in your Unit 8. Next session, we are going to start the petty cash book. The petty cash book, children. I hope you'll get together with me for that too. And to finish off petty cash book, probably several sessions. So hope to see you soon. Thank you very much.